As we kick off the final full trading week of 2016, we are seeing the major U.S. stock averages eke out a gain. The Dow is still struggling to hit that 20,000 level. So joining me today is Peter Cardillo of First Standard Financial. Peter, great to have you here today.
Good to be back.
Well, this is our first interview since we had the Fed meeting last week. As expected, we did get that 25 basis point rate hike, and we did get the projections for the upcoming year. Now, the Fed was hawkish more so than expected. So what do you make of that, and what does that mean for 2017?
I think basically they're going to raise next year at least 3 times, possibly 4, basically in line with what we have been predicting. The fact that they were upbeat on the economy was no surprise. The fact that they raised by 25 basis points was no surprise. And the fact that they were hawkish was no surprise. Because if you, look back over the past several months, we've had some real good, strong economic data. And that all points to an economy that's going to accelerate. And then there's another factor. Of course, that factor is the new administration. And of course, if Mr. Trump should be able to reduce taxes, both at the corporate and personal level, the Fed is going to have to take action because that simply means that deficits are going to widen, and so they will have to act accordingly.
Well, Peter, you mentioned a couple important points there in terms of inflation as well as the new administration. So on top of that, we're going to be watching psychological levels. And of course, if you read the financial headlines, everyone's talking about Dow 20,000. But how realistic is that?
Well, I think it's realistic, but I don't think it's going to happen just yet. You know, last week we made 3 attempts to go above that 20,000 or at least reach it, and 3 times the Dow failed to do that. It's been again struggling today, and I think it's just basically a simple technical factor here, and the factor is that the market seems to be a little top heavy at these levels, and it's going to take some time for the market to be able to penetrate this new psychological level. Will it happen in the last 10 days of this year? I have my doubts about that. Again, with the Fed now out of the way, with most of the major economic indicators also having been reported, it leaves us basically with just a trading affair. And I kind of think a lot of institutions have already closed their books. In fact, Friday we had quadruple witching expirations, and it was a non-event. So that suggests that the market's probably just going to tread water here for the next week or so.
Well, Peter, thank you so much for joining me at the beginning of the week, and we'll have you here next week as well. Thank you.
My pleasure.